Monetary metals pays investors interest on their gold and silver. The availability of a yield on precious metals instead of fiat currency is a value proposition which all types of investors are benefiting from. Providing a yield on gold and silver may seem like a new phenomenon, but it's more accurate to say that paying a yield on gold is an old idea made new again. Before the federal government forced everyone to use irredeemable currency in 1933, yields on gold and silver were as common as the air you breathe. Investors in our gold and silver yield program have been earning between 2 to 4% per annum for a one-year commitment. Most clients are happy to be earning this kind of a return on their metal. However, some investors balk at a gold interest rate of 2 to 4%. They feel that this is too low, given CPI is trending up every month. In the present inflationary environment, earning a yield that will outpace inflation is becoming increasingly difficult, especially for those who rely on fixed income. We get it, and we emphasize, it's not an easy environment to invest in, at all. First, it's important to take inventory of your options and alternatives. The alternatives are, number 1, own gold and silver at home or in a professional vault facility. Number 2, attempt to grow your wealth in dollars and periodically convert those dollars to gold. Number 3, earn a yield on gold and silver with monetary metals. Or number 4, a combination of some or all of the above. For option number 1, we believe everyone should take this first step. Own gold and silver, period. However, there is a limit to this. At some point, owning additional gold and silver at home becomes too risky, since metal at home is uninsurable and therefore at a risk of loss. Owning it in a vault is better, but now you must incur storage fees to the tune of 0.75% per year, which will eat into your gold and silver year over year. But there's a broader point. Owning gold and silver isn't enough. It's not enough to just protect your wealth. You need a strategy to grow your wealth, to grow your gold. That brings us to point number 2. You can continue earning in dollars and convert those dollars to gold periodically. However, we've shown that earning a reliable yield that beats inflation in today's market is a difficult endeavor, to say the least. Finding productive opportunities to deploy capital is hard and becoming harder. Despite the fact that inflation has just surpassed the average return of the S&P 500 for the last 100 years, this remains the most popular option. Let's come back to monetary metals alternative, earning a yield on gold and silver. We want to give a simple answer in response to the question of whether the yield on gold is enough. Albert Einstein famously said that compounding interest is the most powerful force in the universe. The chart below shows how a 2 to 4% yield on gold and silver every year can compound over a 30-year period. When you zoom out, you can see that earning a yield on gold and silver can make a substantial difference in the fight against inflation in your investment portfolio. This is the real impact of a yield on gold and silver for investors. Considering the alternatives of earning 0%, a negative yield because of storage fees, or trying to beat the market with dollars, we think diversification in the type of yield you're earning is worthy of an investor's consideration. Will it be enough? We don't know the answer to that question, and neither does anyone else, unfortunately. All we can say is that earning a yield on gold is a compelling alternative that investors should consider as they aim to meet their financial goals. Be sure to subscribe to the channel and turn on your notifications to catch all our great content. And if you want to get started earning interest on gold, stop by our website, monetary-metals.com, to get in touch with a relationship manager today. See you next time.